Welcome back. Hope you're having a good morning. Well, you have a full Friday and then you could go off to the weekend, but there is plenty of action today. So let's see how this one goes. For the time being, though, let's welcome Mr. Giri, the head of research at IIFL Institutional Equities, who joins us. Hi, Giri. Good morning. Thanks so much for joining in. Well, top of mind is going to be the IT stocks yet again. HCL Tech, well, the numbers were pretty good, actually, or maybe more or less in line. At least we didn't get a disappointment. And science numbers as well were good. What's your approach to the tech pack from now? More pain, or do you think it's good time to start building portfolios?
In some stocks, yes, I'm beginning to recommend persistent again, but I think the valuations, if you look at potential earnings downgrades, which might come in the next couple of quarters, don't look to be as attractive as you would want them to be to enter. Cyient is a bit different than the other tech companies, but the mainstream tech, the large cap tech, they will see some earnings downgrades incrementally also. So this is not quite the trough, in my opinion.
Okay. What do you do now after, a lot of the large earnings have come through, whether it's Infi, TCS, HCL Tech. What's the biggest reading that you've got from this? Of course, things have slowed down. Client spending has perhaps moderated compared to what we've seen a couple of quarters before. Some cancellations are happening as well. But do you think the worst of the news is already in the price or not quite yet?
No, I don't think so. If you look at overall commentary in the US, it's become at least mixed. 3-4 months back, it was very bullish about their economy and all of that. But it's become a little more mixed now. And we know that the rate increases in the US have been much, much bigger than anything we've seen in recent decades. And therefore, the impact of all that will take some time to filter through. And if you read more informed commentary, I think the rest of 2023 will probably see an earnings recession, at least, if not an economic recession, take root more strongly. It might get mixed up a little bit with the US central bank beginning to cut rates also. And therefore, at that time, the markets might respond positively. It's a little difficult to time which one will happen first and what the timing will be. They'll also overlap. But you could see earnings recession and rate cuts happen at the same time. But the earnings recession will be a little bit earlier is what I feel. So the worst of the news is not yet priced in. We have seen almost 7 out of the last 8 months in the US having PMI below 50. And this is including services. And we've seen retail spending be flat for almost 2 years despite falling savings rate. So a lot of weaknesses there in the US economy, which haven't quite come to the numbers. They haven't come to the S&P earnings estimates yet. And we'll see more downgrades. So the bad news is not fully there in the price of the Indian IT stocks.
Giri, hi, morning. And I think in that pack, your top pick is persistent within that pack in terms of what you like relatively. Insurance, Giri, if you will, there is ICICI Lombard, which reported recently. ICICI Pru's reported now. What's the view? I think you guys like ICICI Lombard.
Yeah, we do have a substantial upside in the target price, and the stock has corrected even after the results, which were reasonable. The stock corrected further. The top line growth was weak. But in these kinds of cases, some positive signal has to come through first in the top line. And that we are not quite there yet in Lombard. So the stock is unlikely to take off relative to the market. In insurance, it's a different matter. I think the whole of 2022 for the insurance pack derate, and IIFL Life also fell. And that stock might bottom out quicker. It's very cheap now with a price to VNB of almost 8 times for FY25. And it hasn't been that cheap in recent times. So the insurance business is also a little bit defensive in character and fragmented, much more retail participation. And in an environment where even in India we'll see earnings downgrades, insurance might be a little bit better protected against earnings downgrades. So I would favor IIFL Life. And also SBI Life, HDFC Life, the whole insurance pack looks attractive.
Oh, lovely. All right. So you spoke about some of those ICICI Group companies. What about ICICI Bank? That's going to be the big trigger, right? In the next couple of days, they come out with their set of numbers. How do you view the stock from here on? Because the last couple of years, we have seen a big re-rating of the stock itself. From here on, what's your view?
Yeah, in fact, for some time last year, ICICI Bank's P multiple was higher than that of HDFC Bank, which would have been a sacrifice to think about in times gone by. that re-rating is over. I think incrementally it will be with the pack, with the growth. We are quite positive on banks. They seem to have got derated quite a bit. That looked like that last year also, but in spite of that, they kept performing and also getting derated. The earnings growth is pretty good. Only one segment, industrial credit, is not growing fast, but the other two segments, retail, agri, small business and all, are doing decently. ICICI Bank seems to be the best prepared of the pack in terms of negotiating the slowdown also. But I think technicals favor HDFC Bank a little bit more. So I think HDFC Bank, in terms of stock price performance expected over the next 6 months, has its nose ahead a little bit. We favor more PSU banks than these banks. I think SBI and BOB would be my pick ahead of these two, if I were to pick from the banks.
Giri, two other areas. One is autos, where I think you guys have recently trimmed expectations, earnings expectations. What's the view there briefly? And the other area is retail, where you guys published a big report, I think, initiating coverage and talking about the big shift from unorganized to organized. What are your top picks there? We had the management of V-Mart with us recently. They're still saying that it's pretty tough, at least in the markets that they operate in. Go on.
Yeah, first on the auto pack. See, auto is a very non-homogeneous sector and different segments are behaving differently. I frankly would think that the biggest stock, Tata Motors, is very difficult to predict. The next biggest one, Maruti, the operational numbers seem to have lower significance than the movement in the LME and the movement in the yen. And I would think that the best bets would come from the truck segment, tire segment. These are all related to agri, construction and all, which are a little bit more counter-cyclical. And when we're talking about a widespread earnings recession, that might be more valuable. So I would think that names like Ashok Leyland, Balkrishna, which we recently upgraded, or Apollo Tyres, which is in our list of top picks, are all likely to do very well. Some of the other names like Hero, I doubt if the low growth in those names will let them perform. Bajaj Auto has already done very well. We upgraded that, and in a month since we upgraded, the stock is about 15-20% up. So the near-term rally is already done and over with. And the rest of the auto pack, battery names, we don't particularly like. iShares looks a little good in certain respects, but if there is a discretionary spending slowdown, iShares would face more of the heat than the other commoditized names. Therefore, in auto, I would limit myself to the tire and the truck companies for the time being, and that they've done reasonably well. Apollo has done well, and so has Ashok. Balkrishna's time is yet to come. Their earnings did not reflect a fall in crude quarter. So this quarter, that should take care of it. The risk there is...
Giri, sure, we got that. We'll just come back to you. And in fact, I want to ask you about many more sectors, but due to paucity of time, I just want to squeeze in one more important trigger for the day, which is Reliance Industries earnings that comes out in the evening. Now,